I am not a financial advisor. These videos are all meant for educational purposes only. All complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is Monday, January 8th, 2024. So coming right back because I know I wanted to make a video on Friday, and I didn't get a chance to. I wish I did because I would have told you about this big ass buy today. But I did refer, and this is the last video that I made. This was January the 3rd. And then calling that high there, and then obviously if calling that high, we're looking for sells, came down to take out that liquidity. And then I was mentioning this area here where we bounced off of. I believe that's the July 19th. Now, I was telling you that we're headed right for it. We came underneath to take that liquidity I was pointing at. It's actually this low right here. We got into this daily imbalance right there, almost sealed it up, and then bounced up. Now, you got to remember, or you got to understand, like in general commonality, you got to understand that if we're coming down here to wipe out a seller's remorse, meaning it's a breakthrough, and anyone who was selling, they had the opportunity to get back out here. In general, fair delivery in the marketplace, right? You're going to expect a bounce from here. And again, I wish I made that video Friday, but I thought that was probably common sense or just implied, right? But anyways, let me get into it. And then as you see here, this is the buy that I took personally here pre 9:30 open. Beautiful buy. Had the imbalance right here, had the support right here with this block right here, and obviously I'm showing you here, and I actually made a mistake and doubled the leverage. Not doubled, even more. I put 10. I didn't even mean to, but I kind of left it alone. Obviously, here we're going to attack this imbalance right here, plus the highs. These are the highs that I wanted to make a video on Friday and or even Thursday, and I just couldn't do it. So, but very clear, and you've seen this price action before. When you see these lower highs building up like this on purpose, and I'll try to go through the last couple days explanation too, since I didn't get a chance to do it, which I wish I fucking did, but oh well. But when you get these lower highs like that and they're not taking out that liquidity, that's a sure sign that we're coming to grab that. And preferably it would be this coming week that we did it, right? So as we closed here, so showing the entry, because I had someone message me like, where do you get your entries in and this and that, and that was the actually whole purpose of me screenshotting it here, was to show the entry way before the day kind of exploded. But you have your imbalance here, and you have your down candle and support, and we've already went above the week open here, and we have liquidity targeted or defined, and that's going to change your trading. If if you don't have the liquidity defined before you take your trade, or at least an inefficiency, which is this imbalance, then you're not trading, you're not setting up your day correctly. And as you can see here, we have the fake move down. This is just the wick of the day, right? Anything above here is bullish. Not saying that it couldn't sell from here, but you have your order flow here. I'm showing you this all before I show you the actual day, which you know how the day panned out. But the mindset and the mind and what you should be thinking here, you can clearly see you have order flow. All these down candles and imbalances are holding price up. So that's when you get the fake move of the day, right, it's going to be below the open, and generally, obviously, in London, pre-New York, right? Pre-New York meaning 7 o'clock. And then, liquidity defined right here, 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 all through here. And I'm going to go to the hour chart. All this, that's all liquidity. We've been selling constantly, right? So you have a nice displacement here, sort of speak, shifting over structure, which I got to go in a different time frame, but pretty much this high is what I'm talking about. Going up, retracing back, okay, and look where it's tapping. It's tapping that, so that long, big, that long green line that I've that was the 19th, wasn't it? Yeah. So July 19th, dragged out. I dragged it out on purpose because you're going to see it hold that support at some sense, right? Because this is, you got support there, you got support there. We broke through that, or resistance. We broke through that. Now, I'm not teaching support resistance, and I don't follow support resistance, but you, at some sense, you have to follow classic, basic, general support resistance, right? So, I mean, because not everybody is in tune with what we do as far as the precision of technicals. Now, again, also oversold. And by the way, for the person that asked me about what this indicator was, I could tell you're looking for an easy way out. Like I'm not being rude, but when I hear something like that, it's like, okay, wait a minute. You should be asking questions about the actual technicals. I'm telling you, I don't use this all the time and every day. It will be like the fifth thing that I look at, right? Now, obviously here this is oversold, but if you tried to use this indicator today, you got burnt. I know you got burnt. I'm not looking at this burnt. And to prove it and to show you why you should care about technical levels, which are highs and old highs and specific levels of lows that got broken through, which I'm going to show you in a second. I don't think this video is going to be short, but this is the reason why. Who cares about these technical? You need to understand the logic of the market, which is we've been selling, and we're coming back up and getting into this imbalance. This broke low, this right here. This level is going to be important when I mention in the next trade. 16,758 and a quarter. Actually, it was a half, wasn't it? Look up here. The low of this candle was 758 and a half. So understanding this market structure and breaking through and coming back. If we're bullish, you should be buying up here. If we're bearish, you should still be buying here. You hear that? So even if you're bearish, right, which I'm actually bearish, but I mean, we'll see what happens if it goes above here. I don't know. I don't care. But the point is that I know as much as breaking through here and selling from here and coming back down from here and buying back up from here. Now from here, I don't know where it's going to go. I can't tell you. But this common general price action is super common sense for me. Maybe it isn't for you. Maybe you're a new trader. I don't know. But I can't tell you after what's going to happen here. I mean, me, generally, I want it to just roll over and break this low and come down. I mean, but that's not what the topic is here. The point is that you should be buying here if you're bullish or bearish. Okay. So that being said, remember this level here, that 758. It was 758 and a half. Okay. Right there. But that'll explain this little trade that I took. Now watch this. So I'm just going to talk about today real quick. So today you have your higher highs, higher lows. You have these down candles supporting, especially right here, coming right back in. For me, this is a 5 minute. I want to go in a 1 minute just so you can see this. Oh, not there. Over here. So you can see the trade. I take the picture here, and I don't have this daily imbalance shown, and basically it's right here. This let me zoom out right there. You can see that in between here, this daily imbalance. I have it already in my head. I don't need it. I don't need to be drawing that. So I do a lot of these drawings for you guys. That's why I kept this level there so you could see it. Which is that long that high that we broke, July 19, and then also this imbalance here. The last video that I made, I showed the daily imbalance here, which is this area here. But I was saying that we're targeting this area as a sort of support, and then I just drew this recently, like Friday, but which is this. Right here, this blue box, this is what that daily imbalance is. So we almost sealed it up, right? All right, and then I'm coming back here to show you that. So I don't have it always drawn on it. So when I'm taking screenshots, it's like I miss that mentality. But anyways, what was key for me was reaching that low of the imbalance, which is right below that is the highs of the high of Friday, the high of Thursday, right?
And that's what I'm really focusing on here. As you see price, well, before we go up, let me just kind of show what's leading up to it. As you can see here, you can see that when we opened up, we came down and we took out that low right there. Okay, which that low did bounce off of that July 19 high, which I'm gonna go into in a minute about explaining the last couple days. But to just for today's logic, so you understand, if it's a bullish day, this is the fake move down. Very common sense. Takes out that low. It gets back into, and that's why I left these here. I didn't need it here, but that's why I'm showing it to you. Coming right back into that daily imbalance, which is of December 11, 2023. So that, and we get into this down candle right here. See this big down candle on the 15 minute? On the 1 hour, it's a wick. You can't see it, but on the 15 minute, and I'm just using these time frames, you can see that we tap right into that, let's see, the open of this, I'm sorry, the close of this candle. The close is 379. The low of this candle is 378 and a quarter. So it went 3 ticks down below that open. I'm sorry, that close, which would be that wick, right? So, and what I'm trying to say is it's a demand block here. It's a support, and it's took out that low. So that's the fake move. And this is obviously, this is in London, so I'm not awake. But when I'm waking up here, and if anyone asks me how am I getting these entries, it's because I understand order flow. This is all about order flow. It's all about order flow, and it's all about defining where your liquidity is or where the range can go. I did not expect all of this extra movement, but at the same time, it's a buy program, and I'm not surprised. Because why? Because they're trying to rush up for everybody that was selling here and to get into this low that we broke, which I'm going to explain in a second. So when you see that and you understand all that liquidity just to the left of the chart, you know that they're going to keep this thing rolling, right? And you don't want to be trying to short this market when it's rolling like that. If you're trying to use this, it goes back to the person who asked me what this indicator was. It's an RSI divergence indicator. That's what it's called. But again, we're not relying on this. Now, when this is more helpful is sometimes in the higher time frames, which is the 4 hour, the 1 hour, as you can see here. But the thing is that look where it's oversold here. This is on last Tuesday. You were here. Look how many days it kept going. So if you were trying to use this, we understand that once the price comes far enough or farther, as far as taking out liquidity, balancing price, stretching down, we know that's on the oversold side. We don't need this to tell us that. But if you're relying on this, I promise you will fail as a trader and you'll probably quit. That's not the way to trade. You need technicals, you need order flow, and you need common sense as far as the way the daily candle is going to print. Meaning, like in this, obviously this is a big range, but you expect this to open. If it's a bullish day, you're going to maybe create a swing low here, obviously, right? Because you have this low here, you have this low here, and you expect this daily to come back down a little bit. All right, comes 50% of that previous day's wick, right? Just looking at this time frame, tapping that daily imbalance right there, right? Which we already hit. Just because we used it already doesn't mean it doesn't use it again. But the purpose is that if this is the accumulation comes down as a manipulation and the distribution is pushed up. So even if the daily candle was only this tall right here where my cursor is, you're still understanding this type of movement, right? Which if it closed here means open, low, close. And if I even change this to, I could change this. I'm not going to do it, but if you change this to a bar chart, you'll understand that it opened here, came up, came down, came up. That was the low of the day, right? Came up. Low of the day is generally in London time, right? It's Monday, so you also have a very high possibility of it being the low of the week, and preferably Tuesday or Wednesday. But in general, just common general gist of what you expect this weak candle to do. And coming back up to clear all this is generally common sense. But Anyway, so the purpose of that, explaining that, is so you understand what we're thinking here. So we're already buyers. We already know to be buyers here. On top of that, we have liquidity above. We have that imbalance. Now, as you can see here, let me see if I can kind of, I want to make this video short, man. But you'll see here we have that imbalance right here. We come right back to it, right? It's the 1 minute, right? Yeah. And you'll see that we have this down candle here. This is the last down candle. It's the last lowest closed body candle as well, right? Price dips right into it here, okay? And then this candle right here, this 909, this dips right back into it. So with that, that's where I enter immediately. I'm about 50% of this this imbalance right there. Let me kind of stretch it out because all this wasn't there at the time, and it definitely wasn't this big either. But you can see a lot more clear here. So support here, you see the down candle is not taking out higher lows. All right, we shoot up, we have a shift here, right? Still could have been bearish, but comes down. You have nice reactions. You have the wicks. You see the bodies here. The bodies aren't even past generally 50% of it. These are all little signatures that you should be paying attention to. Price comes back down in. Boom. That's an automatic buy for me. Now, would I have liked this? Yes, but I definitely wanted to see some type of momentum, at least a bullish candle closing, retracing back in. This area is still alive. So, what else here? So stop loss is going to be underneath generally this candle here. But see, this had already moved down. So once this moved down, I'm 50% in this candle right here, damn near, right? So I don't want it to see it go below, and it doesn't. Then it snaps back up. So once we come back in, this is a return to the imbalance. That's a buy. Then the stop loss is here. Because if it's coming any lower than 50% of this candle, I don't want to be in it. Anyways, this is all basic, but price holding, and then I got to screenshot because this is a lot. And then obviously targeting this liquidity pool. Okay, massive liquidity pool right there. Nice. All right, daily imbalance, and then for me, that was it for this trade. Now again, the price went right through, sealed it up, and kept going. Now, to be honest, I didn't expect it to do all this to happen today, right? But it did. So here's the thing, with this movement here, okay. Price pops up, comes a little bit higher. Now, with this up candle right here, I thought this would be a nice place for it to sell from, right? I didn't expect all this, right? But I would expect this up candles right here to act as a resistance or as a up candle to hold price down. So when I see this movement right here, so price is moving up, I'm waiting for a nice sell. I'm not relying on this, that's for sure. As you see here, I'm waiting for a shift of structure for a sell. So this is where I take a loss right here because it had every element I needed. So I'm just going to show you so you can see it. I have a sweep above. I have a break here of this swing low, and that swing low. We have a retracement right back into it. You see, look where the candle reaches up perfectly to that last up candle and sealing it. So I'm like, yo, this is beautiful. I'm going to take this back down. Where am I going to take this back down? If it was going to turn into that kind of day, I wanted to come back down to this this imbalance, right? Below here and just wipe out some liquidity and then possibly another push up. But it didn't pan out. Obviously, it broke right through and this was a loss. No problem for me. So at this point, I'm pretty much over. And as you can see, the price did buy up all the way until lunch. Would have been a better idea to hold it. Hey, this was too rich for my blood above here. I was super ecstatic about winning the trade. And I'm a little rusty to begin with, to be honest, but it's no big deal. So when I see this break above here, I'm like, I know what time it is. This is a buy program. This thing's gonna constantly push up. Also, when I was in here, in this area here, I'm slamming against this up candle. This is the one I'm looking at. These two right here, and on the 4 hour, it was right here. See this? See these? No, not here. Yeah, I'm sorry, this candle. So on the 4 hour, it's this candle right here, and I know we're tapping, and I know we're hitting it, and we've took out all that liquidity. That was the purpose of my sell, and I believe that I even looked at this halfway mark, and it was kind of like bumping it, and I was like, okay, what if we, this could be a use of it not crossing, and would be a nice sell to come back down into balancing some of this, and that was what I was hoping for, but it didn't pan out. But after this blew through, I knew it was a buy program. I knew what they were doing, and because of that, I'll show you another trade that I decided to take. Now watch this. This is just to prove to you that your indicators don't mean shit, because I take a buy here. Okay, I take this buy here. And why am I taking this buy? Well, because at this point, I got the low-hanging fruit of understanding that we're taking the last 3 days out. The 3-day highs, we're taking them out. And this is why I got the line here, to show you that this is the high of Wednesday. So that high there, I know we're coming for it. We're already, and to show you that I'm not just buying and selling. I'm not buying at low and selling high. I'm following technicals and understanding. So most of you would have never, or if anyone, never took this buy right here. I took this buy right here because, number one, I know that where we're drawing to. So your levels are important. Fuck these indicators, number one. Number two, I have first of all, I have the high here. We've already took out this high, which is Friday. We took out that high, which is Thursday, and now I'm rushing for this, and it's right there. I know we're going for it. Number one. Number two, a 50% level is right here in this red. Okay, I didn't even have to draw it out. I just knew where it was. And number three, I am also targeting this low. That low I told you about, which is 178. I'm sorry, 16,758 and a half. All right. And you'll see by me taking this trade here, I'm showing you my logic. And to show you that I'm gunning and I'm holding for this technical, for this low, that low. That's 16,758 and a half. So I put, just to show you, I'm buying this high. No, I'm buying this high. This is to prove to you what the algorithm is hunting. So as you see here, I got an imbalance right here with these down candles. This candle right here, which I'll go in the chart and show you, but this candle right there where I have my cursor, drag that out, taps it perfectly. You see how it respects that as well. And then price pops up. I don't even get here. I'm not even buying in here. I bought it here. So then you have this next imbalance here with a through imbalance to the left of it, that candle. And then we come and tap that actual high of this candle right there. Look where it is. Look where it's sitting. So as soon as that comes down, bounces up, I'm in the trade. So and where am I taking this? And I did this for the purpose of the persons who are using indicators. I literally am screenshotting. I'm not doing this I'm doing this for this purpose, to show you. Who cares? You don't want to you want to use these indicators as a scalping method, and if it's a fast market up and down in consolidations, that's when I love to use it. Otherwise, I'm not really using it. And you can see I'm on the oversold area of this 1 hour. I'm on the oversold area 1 hour. Everything's over. I'm sorry, not oversold. Overbought. I'm on the overbought area here, everywhere. Right. By the way, you can see that when it bounces, it stays above that 50%. So it's to show you it's also constantly buying. And I took the screenshot here before it hit this sell limit, just so you can see it. Because if it hits it, you won't even know it was there. And I'm showing you this. I took half the trade here off, and then took off the next half off here, which is that low that I was just telling you about. So first half is taken off of that high, which is Wednesday, and then that next 16,758 and a half, that is this level here, right here. That's what I was showing. Now, I don't mark everything, but again, that's where I was targeting. And if you were watching price, you would have seen it snap. See this little wick right there? If you were watching this thing live, you would have saw it snap. It literally snapped right to it, and it took me out. It was beautiful. What a beautiful trade. And to show you that, hey, this is confidence. This is to buy up here and to hold for this level up to here after all what's happened today. That's to show you precision and confidence and understanding what you're doing. And then also the other reason why was because it was after 1:30. So as soon as 1:30 kicks in, I know that the PM session kicks in and the algorithm is going to start running. So that was another reason why I waited till here to buy. So and beautiful, man. It came right to it, right? Snap retraced. Obviously I'm done for today, but and look how farther we got. So yeah, I gotta make this short. So that being the case, look to the left of the chart, right? So like for example, when I had this imbalance highlighted, like these are all levels that I know it's going to. I don't know how far it's gonna go. I don't know, but I do know what levels are important for them to efficiently deliver price and for them to wipe out liquidity. So I'm gonna delete this. I'm going to leave that because I think we're coming right back to this for maybe another bounce. But the purpose is when this is coming up, again, what are you thinking to yourself? Well, for me, this was the pool right here. This was it right here. I did not expect all this. But once it keeps going, what are you saying to yourself? Well, all right, let me come back down here just a real quick. God, we moved so much today. Once you see it came to that low of that daily imbalance, look how it's fucking around sitting there. Right? Then boom, shoots up right to it, right? All right, and then this comes down, right? Now, you didn't see this come down and break below, right? It's constant. Look, it didn't even tap it here. I thought it was going to tap here and it even didn't. I'm like, this is bullish as fuck. But what's really going on is this last down candle, right? So same level. Look at this low here. Look at the open of this candle. The open is 16,623 and a quarter, and the low of this candle is 16,623 even. So it went below one tick, and that's what they do. That's a signature for them to get a better price and to make sure that they get filled, which would be a tick below. So, anyways, that's some extra tip, but. The purpose is that it's super bullish, right? And when you look to the left of your chart, okay, you're looking at, okay, where are the inefficiencies and where are the liquidity points? Well, I mean, all these lower highs, all these little lower highs, of course. And then we stopped here. We stopped right here, which I had a feeling it would, but, I wasn't a participant. Obviously, you don't need to be. But right there, you can see, let me change this. You can see right here that you have that imbalance right there with that up candle, and we didn't tap that yet. Let me move this down. As you see, we didn't seal it, but we also have this gap. Let me move this so you can see that too. So there's a gap up here, which we're probably gonna smash. Is this a good selling place? Kinda, but I know, well, I'll get into that in a minute, but. As you see, these are the area. You see, they're all clean highs right here. See, I'm trying to see if you can see this. All clean right there. See that? With that imbalance right there, and the hour showing you. On the 4 hour, you can't see it, but what you can see here is the difference between this low that I just talked about here, which this is the low on December 20th, 23, right? And then the breakthrough of that daily candle, right? And then we came back up. But look at the space in between there and there, right? So this is, and then on the 4 hour, I'm showing it like this, right? But this imbalance right here, this is where I'm going with this. This imbalance right here is obviously going to be tapped. So with this imbalance, with this possible resistance level, this down candle here, which is December 20th, we broke through that structure, and our purpose is this going to be a resistance block or not? So with it being such a big ass candle, it can come up to 50% of it, right? So that's that level right there. Look what I'm showing you. 16,927. I'm just eyeballing this. Now look to your right here. We have this imbalance here. So 50% of this candle, if you wanted to measure it, let me see if I could measure it. And that would be about 16,879 right there. It's actually 16,877 and 3/4. I'm expecting price to come up here, somewhere up to here at the least, and then roll over, right? So if you have the levels that I mentioned, you can go and I mean, do I need to draw it? I don't know. I guess so. Right, so you know what I'm doing here. That's that. This is the 50% of this imbalance right here. And then what I also like, well, I should have left that there. I'm gonna delete this because I was just trying to show you. We got that gap there, and then let me measure this down candle right here, just the bodies, right here. You can't see it, can you? Why isn't it showing? God. What's the close here? 794 and 3/4. Okay, so now I got the high of the open of this candle and the close of this candle. This is December 20th. The 50% level is right there. So I'm just gonna, just so you could visually see it. The level is 16,909 and 1/4. So anyways, this is where I'm expecting price to kind of find its way, roll over, be on the overbought area, and then come down to be bearish again. Now, if that doesn't happen, and we have CPI on Wednesday, I mean, it's possible that we do blow through. Not all on Wednesday, but we do make a new high. I don't know. Right now, this has been a normal, healthy breakout, retrace, support. You would expect to break that high and keep going up. I don't know. But I know the value shouldn't be here. I know the value should be coming down here, right? So with that case, I expect to see some type of activity rolling back over to come down and take out this low and so on. So we'll see how it goes. But we are at look at this, at that 50 level. This is the other thing I wanted to mention, is that we're at that equilibrium as well. And let me do this so we can delineate more where lines up. We have the 61 here, we have the 70 here. So I kind of like this area right here. It all depends, but let's see here. We also have this candle. Let me delete this. We also have this down candle right here, and we broke through it. It's possible that we also reach somewhere in between this candle here and then sell. So this whole area, it's wide open. I really, it's very hard to understand, but all I do know is that these are the possibilities. So let's see here. And then I was going to mention dollar. And then if you recall, I was mentioning that we had that gap there and we pushed right to it and we sold nicely from it, right? And that as we were going to go up, we were going to come down. That's when we made that low on Friday, right? So we made the high here in dollar. We got into that imbalance there, and then we broke down and we retraced, and then dollar came down again while we were going up. So, but I don't know if I'm sold on the idea of dollar being more bearish. I've got a strong feeling that we want to come back up into this area here. So I'm going to highlight it. This is if dollar is bullish. I like this area here with these clean pieces of liquidity there. But if we don't make it that high, then we're going to come down now. And we're going to keep going up. So, but as you see, nicely hit that. No bodies there, though. So I don't think the top side's done. Can this dip down a little bit more into here? Sure it can. Bounce maybe into 50% of here. and then go back up. But right now, I feel like a consolidation is coming. So, and this is, to me, to be honest, this is kind of an ugly place to be. If you're expecting, as far as the swing trader guys knows, I mean, this was a nice swing here. This was a nice swing from here to here. But from here, I don't know what to tell you. Your guess is as good as mine. But these stacked levels here that we've got with this 61, this 70 is looking really nice. So I'm gonna, and if we were to come and tap that low, that would be a nice level as well. So I'll even put that there and be done with the video because I need to be. And this whole area here is very nice here. So I'm even gonna put it from I see. Now you see got this little imbalance right there. I don't know now the only way we can go up this high up there is if we take is if CPI or something, some news event does that. So I'm even going to draw this here. Again, I don't expect the market to come this high, but tapping into there is very possible. Only because this was the break of structure here, like the minor structure, and then we came back, and then all these lower highs here. This was a very nice place to sell. So everybody and their mother is still in this trade from here at the minimum, right? Because even if they thought this was bouncing from here and going up, once it broke, maybe traders changed their idea and we're momentum traders and we're looking for the breakout, and this would be where that pocket of liquidity and price would probably be too. But I mean, I don't like this level, but again, extreme level with some type of news event, whatever. But I'm liking this 70 area. Again, it doesn't mean it's going to tap to 70 and then run. I'm just giving you an idea of what these levels, where it can go. And then on the daily, this level right here, this is on the daily. That low, if we were to seal up the imbalance right there on the daily, this is actually what I highlighted here was actually a daily imbalance as well. But so I'm a little sloppy with the charts today and the colors, but these should not be light green. These should all be dark. So, anyways, I don't think there's anything else I need to mention, but I'll fix the chart later. But and then here we had a nice little divergence here on Dow while we were all coming up at the 9:30 open, and yeah, man. Let's see. Is there anything else? I don't think there's anything else. So, all right, you guys take care. And till tomorrow, God bless.